Hello and welcome to CMC Markets Trading Outlook for the week of June the 29th, 2015. My name is Colin Szynski, Chief Market Strategist. Our topic this week is grains, gigs, and grease. This video has been brought to us by the letter G, and it's a huge potentially week for trading. And there's so much going on. I'm just going to try and hit some of the key points, but there are a few things. First of all, this week has the potential to start off big with negotiations on Greece going on over the weekend, and things apparently finally coming to some sort of a head or a conclusion with their June 30th bailout deadline and IMF payment deadlines looming. Also this week we have a focus on jobs or gigs with employment reports coming out from Germany, but most importantly from the United States. We get ADP payrolls on Wednesday, and in the rare week we have the non-farm payrolls on Thursday, and the reason is because the U.S. has a holiday on Friday. They're taking off the 3rd to make up for the fact that the 4th of July is on a weekend this year. We also have a Canada holiday on July the 1st, so there's a lot going on, but particularly what we're likely to see is a lot of the trading get compressed into a few days, right at the beginning of the week and then through the middle of the week, but because of that we do have the potential for a lot of activity. The third area, the grains, is also quite significant. This week, as with summer approaching now, the media is really started to pick up on grain crop conditions around the world, particularly in the United States, Canada, and Eastern Europe. And what we've started to see is that because of El Nino, the United States is getting torrential rainfalls that's hurting their crop quality. Western Canada is in a drought, and Eastern Europe's in a drought, which is impacting their crops as well. So we're starting to see grain prices take off. This is the story that could play out right through the summer and into the harvest, so we could see a lot of action continue there. I'm going to start off with Greece, and I'm going to start off with gold, which is one of the places where we might see things come about. The negotiations are ongoing, but they really seem to be troubled. The German finance minister Schäuble came out and basically called it a 50-50 proposition on whether they get a deal or not, and flatly the market seems to think that way too. The market's been getting into a tighter and tighter range, and very narrow range for quite some time, but when it moves, we have the potential for an explosive move in one direction or the other, but nobody seems to know which one. So until we get an idea of which way things are going with Greece, are they going to stay or are they going to go, then we have the potential for significant moves in the markets to start the week. Overall, the feeling in the marketplace does still seem to be fairly nonchalant about the whole thing. We're not seeing gold explode or any other defensive takeoff. The Greek Treasury yield is actually down here on the Friday, and it's just above 10%. It's not the 26% where it peaked. I mean, it's the street's pretty lackadaisical about the whole thing, which it feels that regardless of what happens, that there's not going to be a huge contagion, that a lot of the fears of Armageddon that people have been bandying about for years. There's a lot of people thinking probably that's not going to happen, that they'll find a way to work through it one way or the other. And at this point, I think that a lot of traders would just like to see a decision be made so that they can move on without all this uncertainty hanging over the markets all the time. So looking here at gold, we're actually seeing gold has been trending lower here. Again, it had a double bottom back in completed a double bottom here back in October and March, and it's been sitting in this channel here between about 1170 and 1220. It's coming off the last few months, testing the bottom of the channel. RSI has also been about a 40 to 60 channel, confirming the sideways momentum. Again, it's getting to the bottom of that as well. There's potential that we could see gold break the 1170 here, and if we do, first support here is about 1162, and then this big one here 1142. We've got a double bottom, and there is a possibility we could see a triple bottom test in the gold price. So that's one market we could see active this week. Also on any decision that comes out of Greece, likely to see activity in the euro dollar, which I'll also bring up here and show. That interestingly, like gold, the euro dollar had a double bottom base back here. Its recovery has been stronger though, getting a nice ascending triangle pattern forming here. But it does seem to just be going sideways here. Still, euro, we could see a significant move either way. It's right now around 111.50. This is 112.85 and 115 on the downside. 1.1111, $11.11, and this one here is in and around 109.80 and the 110 even round number. Watching out here though, the RSI for the euro dollar is starting to break down, and And because of that, we could see that slip lower. Some of the places, if we did see capital coming out of Europe, we could see some of it going into Great Britain, and so I'll just bring up cable here as an example. Cable's a little even more interesting chart because it's had a little double bottom here in March and April, and it's been working its way higher. It more recently, it's become a bit overbought here. We did have a negative RSI divergence, suggesting that it might have been getting a little overextended and upward momentum starting to weaken. We've had a bit of a pullback here from 159 to 157, but look at this. This is the most interesting thing about cable, is that we're getting very close here to a golden cross. The 50-day moving average in particular really turning up here, getting ready to break through the 200. If that happens, would be a bullish sign for sterling. And what it would suggest is that people are starting to think towards a UK interest rate increase, because one of the reasons that it had been come down was people speculating on a US increase. The Bank of England's been talking about rate increases mid-2016. However, if the Fed were to move up, and the Bank of England could also move up. I'm also going to take a look here and show the DAX here as well, because this is another index that could be very volatile off of whatever comes out of Greece. Had a huge run up into April. Again, here was a negative divergence in the RSI that signaled this top here with upward momentum was starting to slow. It didn't confirm this top, and we've had it trending lower. Well, what's interesting here is that we're getting some mixed signals. We've been trying to base build here, interesting, support in the 10,800 area, and it's climbed back up 11,000. Now it's trading around 11,500. First support here around 11,350. That's 11,650. That's 11,900. Could have some significant swings on whatever comes out of Greece. But most interestingly here, the RSI has bottomed, has broken out of a downtrend, and has come up above 50, retested it, and moving higher. So overall, it does appear as though this swing here it does seem to be base building and trying to work its way up. Because there's a couple of ways things could go with Greece. You could get a deal, and then there would be probably quite a bit of euphoria and relief, and we'd probably see markets move up. If there's no deal and Greece leaves the Eurozone, well, it could go a couple of ways. Some people could see this as a weakness long term for Europe and for the euro, and some people could see it as a strength in the short term, that it would be removing one of the weaker members from the club. So it can be seen in two ways, and also, of course, the other one is the removal of uncertainty. Just that if something finally gets done, then that uncertainty effect gets taken away. The markets can then discount the news and drive on. So, in fact, there is a potential, and I also have the feeling that some markets may have already discounted the possibility of Greece leaving the Eurozone, particularly Euro-Dollar and the DAX. So we actually could see a relief rally, but it's hard to say, and depending, we could have the markets go the other way as well, and that's why it's a little bit uncertain to start the week. Moving on now, we're going to shift to the United States. Overall, I'll just note here briefly throughout the week, we also get, because it's the end of the month, as we get into Tuesday night and Wednesday, we get manufacturing purchasing managers from reports from around the world. On Wednesday, we get U.S. ADP payrolls. On Thursday, we get U.S. non-farm payrolls and ECB minutes. And there's quite a flurry of news announcements coming out. So that once we do get past the focus on Greece, there's a lot of other news for the street to digest and to chew on that could spark trading activity throughout the week. I'm just going to focus here briefly on U.S. markets, which have been range bound. I'm going to look at the S&P 500 here, which is still flattening out here in a channel between 2040 and about 2135, 2140. The strong upward pulse we had seen coming up out of October, the momentum's been slowing. We've had a big negative RSI divergence forming for several months now, but so far it's still going sideways. There's also some support here in and around currently about 2070 and 2100. We may see more of the same going sideways. If we get a strong employment report or manufacturing PMI out of the U.S., it would further add to the case of an interest rate hike in September. That could limit the upside for U.S. stocks in the short term, keep them range bound through the summer. And on the other hand, if we saw some weakness in employment, which would be a bit of more of a surprise to the street, I think, that then people would get worried about the outlook for corporate earnings. So that could keep the markets basically continuing to trade in this range. But around the reports, don't be surprised if we do see some short-term swings. I also want to just highlight a few other markets while we're at it, and I'll go and look at the currencies in briefly here. I wanted to talk about actually no, I want to talk about I want to talk about China. Chinese markets here. There's another one that could be quite significant, particularly around the PMI reports, because here's the thing. China is going into a pretty substantial correction here. We had this huge explosive rally, mega rally from the middle of March to the middle of April, drew a lot of people into the market. And this rally here was about 23,650 to about 28,650. That's 5,000 points. And since then, we've been steadily retracing it. Well, here we're at the 38% retracement. So far, it's been holding. This long tail here is encouraging that you broke and the buyers came back in. But overall, though, these lower highs are suggesting continued distribution, as in the RSI. If we see this come down, we could see a move back to the 50% retracement level, 26,150 or 26,000. So off the with China putting out their PMI report, we could still see a lot of significant action in the Hong Kong markets, both the Hong Kong 43, and I'm also going to show the China H, which tracks some of the closely to the Shanghai shares, and again, this one here, explosive rally, 11,325 to just above 15,000. It's actually, while the Hang Seng is at the 38% retracement level, the China H shares have broken through the 50% retracement level. They're testing this 13,000 round number here, and the 62% retracement levels here down closer to 12,765, 12,750. So this one here has actually come off even more. And look at this, first we had the negative RSI divergence. Then the RSI went under 50 and it has stayed below 50. It's turning down again, pretty consistent downward pressure against the Chinese markets. Because of that, we could see a lot of action in China equity trading this week, particularly around some of those economic reports. A couple of other things I just wanted to highlight briefly here. I'm going to show crude oil. We'll start with West Texas. It's continuing to level off. If we do see any kind of action here, there's not much in the way of crude oil news beyond the regular reports. It's bouncing around in the 56.50 to 61.50 area. But what's important about crude is that it could have some swings if either Greece news or employment news causes some movement in the U.S. dollar. Then we could see that influencing commodity trades such as crude oil. One area in commodities, though, that's less likely to be influenced by swings in the U.S. dollar and more likely to be influenced by its own internal dynamics is the grains markets. Grains and agricultural have really come around. As I said at the top of this, it's really started to hit home that the weather conditions of the spring could have a serious impact on crops, whether on crop quality or crop quantity. Either way, we could see be in for a rougher harvest this year than last year, and because of that, we're starting to see some action in commodity markets. So I'm going to start with corn. Corn here has been in the falling channel from December, and but now look at this. It's exploded. It's broken out of this channel. The RSI is broken out of a downtrend. It's cleared to this 365, 370 breakout area. Next resistance 390, and then 410, 405 to 410 near this previous peak here. To continue, we're looking at soybeans. Soybeans breaking out here. Broken out of a downtrend already earlier in June. RSI has broken out to the upside. There is an ascending triangle base here. That's been broken out. And it's cleared the 1,000 round number. Next resistance here, about 1035, and then about 1070 and 1100. This, however, really, after a long downtrend, is starting to break out in a pretty significant way. Also, we'll look at wheat here. Big breakout for wheat as well. Same thing. Uptrend in the RSI showing upward momentum and a breakout over 60. Breakout from an ascending triangle base here. Cleared 550. This is 565. This is 6. There are room for some significant retracements of these previous sell-offs here in the grain markets. So there is we do see a lot of potential for activity, and a couple more I wanted to show just for interest. One's cotton. Cotton interestingly enough, has not followed the food grains higher yet. So that leads me to wonder if this could be setting up for a potential catch-up rally as well. It's continuing to base build here, but if the cotton stocks get hit, then that could potentially have room for a catch-up rally. And if we actually look here, it is also starting to break out of a shorter-term downtrend and turn upward as well. So that's the cotton market, and we'll also look at a few other things that longer also could be of interest. We'll look at coffee here has started to pick up as well. So this is Robusta coffee, and as we can see, this also has broken out of a downtrend, working its way higher here as well, and also orange juice. I'll bring that up and show. Orange juice hasn't quite turned yet, but after an extended downtrend here, let me just bring this to a shorter chart, like say 1 year. After a big downdraft here, OJ also been forming a base here in the 110 to 130 range. So agricultural commodities also look like they are starting to form some pretty big bases here. This is weather related, not related to the other news. So this is a story that we could continue to see build and play out over the summer. Overall, we're looking at a huge week for trading. Even with the holidays, we're more likely to just see the action get compressed into a shorter period of time, and because of that, we could see some fairly significant swings in the markets. There's lots of news. There's lots of big news. There's lots of potential market-moving news, and it looks like it's shaping up to be a big week for trading.